I'm Jessica Minton for IB Times TV reporting at the New York Stock Exchange. Stocks edged higher today after positive housing data, but jobless claims fell only slightly last week. PepsiCo and Coca-Cola reported better than expected earnings, while Exxon Mobil reported lower than expected results. We're going to be talking with Stephen Guilfoyle, a broker and economist from Meridian Equity Partners, about how these events will ultimately affect the market. The jobless claims reports came out today. How do you think this is going to psychologically affect the market?
Well, you know, there's a negative here because about 10 times in a row now, 10 weeks in a row, the number has missed on the negative side. And the previous week's number has been revised to make the number look as if it had dropped. So we've seen a negative trend here, which is kind of disguised as a positive week to week. So I think as we near 400,000 per week, it's a serious negative. And when we cross that bridge, we will see that. Right now, it's not so big. It's like 388,000. I think consensus was 375,000 today. And obviously, you can see the market took in stride. We've held on to yesterday's gains. Even the poor economic sentiment number out of Europe didn't hurt us so much today. It's more that Ben Bernanke's speech yesterday, or his press conference, didn't really say anything negative. It was more of a positive press conference with not an overt move towards quantitative easing, but it wasn't ruled out.
How do you think Bernanke's comments yesterday will affect the Asian and European markets?
Well, as you know, the Fed has had the luxury of, through the U.S. dollar reserve currency status, exporting some of its inflation. So as the Fed has expanded its balance sheet, we have not seen all the inflation here. Of course, much of that money is still confined to the banking system, so it's not in the general economy. So, but you do see places like China and India and Brazil complaining about the level of inflation they have and putting some of that blame on our own Federal Reserve Bank. So that's something we have to keep in mind, because the BRIC nations have suggested putting together a bank of their own, which, if it was successful down the road, could circumvent reserve currency status, which would harm us in the long run.
What other reports are you looking towards later today and tomorrow that you think are going to be big in the news? Well,
you know, we do have the GDP tomorrow. We're looking for 2.5%. The Fed yesterday just ratcheted up their projections for 2012 to 2.4 to 2.9, but they lowered 2013 and 2014 projections from where they were. Now, they're still higher year over year, but they're lower than they were. So it seems like maybe they're managing our expectations a little. Maybe they're counting on governmental spending being reduced over the long haul as the economy repairs itself. But for tomorrow, I think 2.5 is probably right. I know some economists are predicting a little higher. I'm thinking maybe just a shade lower.
And the housing data that came out today, do you think that was a positive for the markets as well?
Well, it's being taken as a positive. I mean, we saw, I think, a 4.1% improvement in pending home sales. We were looking for a 1.5% improvement. Now, pending home sales are their existing homes in contract. They haven't closed yet. And since last September, we've seen a 17% improvement in that area, but only a 5% improvement in actual closings. So there is certainly a lag there. Now, should that lag narrow, which is likely to some degree, you probably would see a better housing market, hopefully, as we get into the late spring, early summer.
Other earnings reports set to be released later today include Amazon.com and Zynga Inc. For Friday, Chevron, Procter & Gamble, and Goodyear are also set to report their earnings. Thanks for watching. I'm Jessica Minton for IB Times TV.